risk losing our edge as a nation. And China and the rest of the world are catching up.
The American public has been rightly impatient. Now we're getting it done, both making up for lost time and laying a better foundation for the future.
People who are out of work, who would like to work, but they're afraid because of COVID, because of Delta, they're suffering too, and we cannot lose sight of them.
America's moving again, and your life is going to change for the better.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Francine Lacqua here in Singapore, actually, for the New Economy Forum. Here's what's coming up on today's program. Biden and Xi cool down hostilities. The two leaders call for cooperation in a longer than expected summit. Andrew Bailey feels uneasy about inflation. Evidence mounts that a shortage of workers will drive up British wages. The pound gains after UK unemployment falls. And JP Morgan sues Tesla over a $162 million payment as Elon Musk dumps more stock in the electric car maker. Now, first thing is first, so let's check in on the markets. This is what Europe is doing. I've also been watching yuan. Now, it's not the proximity to China, but it's certainly on the back of that President Xi, President Biden summit. It lasted 30 minutes more than expected, seen as a positive sign that, of course, things are getting better. We saw that cooperation over in Glasgow, certainly on climate change. The Biden administration asking China to do more on trade and to stick to their agreements. China actually asking the U.S. to do more on foreign policy. The other story, of course, we're watching is Bitcoin, 61,270. There was a bit of a sell-off, certainly a pause to the rally overall among some of the cryptocurrencies. But if you look at the European stock 600, first of all, we had a great chart that we need to bring you, looking at the valuation of European stocks compared to the U.S., actually at a record high, a record difference. And then you can see European stocks pretty much unchanged. Of course, the focus is not only on this, but also on President Biden's pick and whether he'll replace or not the Fed chair, Jay Powell. European map. Let's have a look at whether we see a difference between, for example, the UK. You can see down some 0.1%. The focus there on pound. This is closely watched because of what we're seeing overall in the markets because of unemployment, and the DAX pretty much unchanged, as is the FTSE, and the CAC 40 gaining some 0.1%. Now, Joe Biden and President Xi spoke of the need for cooperation, their first face-to-face virtual summit. Both sides are aiming to stabilize the U.S.-China relationship.
It seems to me we need to establish some common sense guardrails to be clear and honest where we disagree and work together where interests intersect, especially on vital global issues like climate change. None of this is a favor to either of our countries, what we do for one another, but it's just responsible world leadership, and you're a major world leader.
Well, joining us now is Roz Matheson, our executive editor for international government. Roz, what did this summit achieve, if anything? And good morning to you.
Good morning. Well, actually, it turned out to be a pretty candid conversation. As you were pointing out, it went longer than they expected. That enabled both leaders to put a bunch of issues on the table and say, from where I sit, this is important, and from where I sit, this is important. Issues like Taiwan, for example, trade, access to markets, and so on. And while there were no great tangibles from any of that, aside from perhaps an acceptance by China to fast-track the ability for executives to enter the country from the US, leaving a lot of tangibles for later. What they've agreed to do is say, let's have this conversation continue. Let's this be a pathway to perhaps to further conversations between us and between the officials in our country. So if anything, it was sort of resetting the table a bit on the relationship, saying let's put a floor under some of these things. We do not want these things to escalate further, and let's get to know each other a bit more as leaders, because of course they've actually not had a proper summit since Joe Biden took office so far.
So, Roz, what do Xi and Biden actually want to resolve tension? Why do they want to resolve tensions now? Is it, is it to do something on climate, or is it just time to de-escalate because they each want something from the other side?
Well, they each have quite a domestic imperative here. Of course, Xi Jinping is coming up to a leadership meeting next year where he still needs to get proper re-endorsement for a third term as president, which kind of busts the precedents, of course, for the longevity of leaders in China. And he needs to sort of not have dust up with the US to interfere with that, because his real focus is on the Chinese economy and on common prosperity, as he calls it, to kind of redistribute wealth within China. On the other side of the coin, of course, Joe Biden's coming into midterm elections. His focus is also very much on his own economy, where he's still trying to get very complicated tax and spending packages through Congress. So he doesn't want the distraction either at this point in time of having to really manage the relationship with China. So each of them has an incentive to de-escalate things and just to put it on a bit of an even footing, at least for the next year or so.
So, Roz, what is the next step to look for?
Well, there was no promise about timelines to meet again when that might happen, but we should look for further efforts towards conversation, possibly with lower level officials meeting again, how often that happens and involving whom, particularly on the technical side. Does it involve officials meeting to discuss tariffs, for example, which are a real big issue for China, and is there any progress on that? So what we want to see is like which officials are going to meet next and discuss what. But at least there seems to have been an agreement to keep the conversation going. So we should look for sort of further examples of when that might happen.
Roz, thank you so much. Roz Matheson there, our executive editor for international government. Now let's talk about the markets, about what the summit means actually for stocks, and then let's talk also about inflation and the possible change in pick for Fed chair. We're joined by Virginie Maisonneuve, Global Chief Investment Officer for Equities at Allianz Global Investors, who joins us now. Virginie, as always, thank you so much for coming on. When you look at President Xi and President Biden, the summit lasting longer, body language that actually seemed to be less provocative than in the past. What does it mean for markets overall going forward? I know there was a little bit of a lift to yuan.
Yeah, I think it's very good, actually. I really believe that China has entered its phase 3, phase 1 being accession to WTO, phase 2 becoming larger than Japan as an economy during the great financial crisis, and phase 3 being now where China is elbowing its spot, if you want, at the top. And with the disruption that we had during the Trump years, and President Xi made it very clear he wanted stability in the relationship, I think this discussion is very important in terms of reconnecting the two countries. Biden recognized the role of China, and it's not only as a massive economy. He made the comments on that in terms of leadership, and I think that's extremely important. China needs that recognition, and of course we need to work together on climate. We need to work together on global arms race. So this is really, really positive.
Virginie, does it actually mean that we're going to get something on trade, or some kind of, if not an agreement, at least sticking to the rules that were signed before? And does that ease at all the supply chains across the world?
So I think that issue is very delicate. Let me tell you why I think that. On one hand, I think the trade war that we've seen with China and the US is actually not really linked to trades of goods, but linked to what I call digital Darwinism, in terms of how technology, in particular artificial intelligence, is really the major tool for competitive edge over the next decades. So part of it is linked to that. Part of it is linked to the tariffs and the relationship that was basically installed during the Trump years. I think the trades of goods, if you look at the agreement that was made, actually China has bought about half the goods that it was targeted to buy. I think there's room here from the US. I think there's room here to improve. But to me, the element around digital Darwinism is going to stay.
So what does that mean? If you look at the supply chain, if you look at some of the climate change crisis, if you look at everything that we're living through, is it going to be supportive of equities, or do you worry that actually inflation is a little bit more entrenched than central banks think?
I think in terms of overall global supply chain, you will see an improvement, and I'm expecting actually global trade to do better in 2022 as we pass hopefully the peak in overall global supply chain issues. All this said, you will keep some pressure in areas like semiconductors, for example, but I think there will be a path to normalization, and there will be a path to improvements in overall trade between China and the US. Of course, that will have an impact on inflation, at least for the global supply chain or bottlenecks linked to supply part of inflation. As we know, there are other elements in the inflationary pressures that we are seeing now. And from my perspective, the key for equity markets is to look at the real rates. And there you still see that real rates in the US, if you look at the 10 years, minus 1%, Germany minus 2% on the 10-year bond. So this, in my view, means that risky assets are still very much need to be bought in portfolios.
Thank you so much, Virginie. We'll get more on that. And of course, we'll look at the negative real yield. Virginie Maisonneuve at Allianz Global Investors stays with us. We'll also talk about the price of oil. Just moments ago, the IEA saying the end of the oil price rally is in sight as they think production is actually recovering. They're also talking about stockpiles. The OECD oil stockpiles have dropped to the low since 2015. They believe that actually OPEC Plus may pump 1.1 million barrels a day above the call on its crude in the first quarter of 2022. We'll have plenty more on crude oil. We'll be live with Youssef Gameldine from ADPEC, and we'll also go back to Virginie on inflation. This is Bloomberg.
What is the difference between phase out and phase down? I don't know. But which during the process of the transition, we'll have to rely on whatever means of energy that they have. I mean, if suddenly somebody could enhance their, the availability of petrol, diesel, gas in the market, people would not have to use that. But it's not India alone. I mean, India is one of the countries. Now, very often what happens, it's also a very convenient play to take the focus off oil and gas and to suddenly talk about coal as if that were the main issue of discussion here. So as I said, there's a little play around here, and whatever that language is, where it came from, etc. I mean, a large number of countries which will, in the short run, have to make sure that their citizens are supplied with electricity.
India's Energy Minister Hardeep Singh Puri there at ADIPEC in Abu Dhabi, speaking exclusively to Bloomberg anchor Youssef Gameldine a little bit earlier. Now let's bring back Virginie Maisonneuve, Global Chief Investment Officer, Equity at Allianz Global Investors. Virginie, I don't know how we look at oil. It's crazy difficult to predict because we've always said that the price of oil is almost as volatile as other things. But as long as it's within a range, it means that we could see a stable economy. What happens if oil reaches 100? Is there a bigger push to renewables? And how do you play it actually in the global equity space?
Yes, I think what's really important is to reflect on the reason why oil prices have been stronger. One element is the miscalibration between the green path, if you want, the longer green path, and the short-term element of post-pandemic rebound. And in that transformation to the green path, there's been clearly some misadjustments, which is completely normal, at the time when there was the option to reduce supply. Beyond that, I truly believe that what we need to think about is, the discussions at COP26, which are absolutely critical. And you will notice that we talk now about 1.8 and not 1.5 anymore. So what will happen? If oil goes above $80, it will invite additional supply. That will, of course, create, depending on what growth is and how fast the transformation to the green energy map, if you want, is going to have an impact. So it's going to be a question of calibration. If you look at overall growth, GDP growth next year, it should be lower than what it is this year, clearly post the rebound. You'll also have a China that will probably grow at around 5%. And China is a big consumer of oil. So, if oil really reached $100, I think that would be quite a bit of a surprise, but it would be a spike as opposed to a sustainable level, in my view.
Virginie, overall, I mean, there's quite a lot to ask you about, whether you put your money into the UK at the moment. I don't know whether a rate hike is imminent after the disappointment, certainly from traders that were hoping and positioned for a rate hike, whether it's back on the table in December because of the employment figure today and how you see, in general, inflation panning out in the UK.
That's interesting. So the numbers we got today were actually quite good in terms of the job numbers, bringing the unemployment rate to 4.3%. And people were expecting 4.4 from 4.5, so an improvement. And clearly, the key issue for the central bank with regards to the expected rate increase last month was really around furlough workers and the end of the subsidies, if you want, to wages. Now, what the data shows us this month is that a lot of workers are actually returning to work as opposed to stay inactive, and that's very positive. That, I believe, opens the path for a rate increase in the UK, as we are seeing a fair amount of inflation in the system.
Virginie, thank you so much for your time today. As always, Virginie Maisonneuve, their Chief Investment Officer at Global Equity at Allianz Global Investors. Now, let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The EU may ease restrictions on state aid for the semiconductor industry. The European Commission could agree to a new policy when it meets tomorrow. A draft of the policy paper seen by Bloomberg considers letting governments subsidise chip plants on the continent. The French have called for more intervention to overcome the global supply crisis. Now, Germany's daily coronavirus deaths have jumped by 265, the most in more than 5 months. It comes as cases over the past 7 days have climbed to a record. Chancellor Angela Merkel and her successor Olaf Scholz will hold a video conference on Thursday with state leaders to discuss those next steps. The new coalition is planning to introduce legislation later this week that would impose tougher curbs on the unvaccinated. Boris Johnson has said it would be perfectly legitimate to suspend part of the Brexit deal with the EU. The UK is demanding a major overhaul of the divorce agreement due to the impact on Northern Ireland. Suspending the deal carries a risk of severe retaliation from the EU. The Prime Minister also said his government still wants to negotiate a solution to the escalating trade dispute. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Coming up, cryptocurrencies under pressure. We'll look at what's driving digital tokens lower next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Singapore from the Bloomberg New Economy Forum. Now, cryptocurrencies under some pressure today. Bitcoin has been sliding towards $60,000, Ether touching one of its lowest levels this month. Well, Bloomberg's Joanna Ossinger covers crypto, and she joins us now. Joanna, first of all, is this a drop or is this just a pause in the rally, and what's behind it?
Hi, Francine. So there are a few things behind it. And of course, Bitcoin has been stuck in this mostly low 60,000s range for a while. So it's not a huge breakout at this point. But we had a couple things. We had the infrastructure bill passed in the US, which did have some crypto tax provisions that made the market a little nervous. And so some trading around that of people trying to buy the dip, and then some leverage may have made the market a little fragile. And then we had China coming out and warning state firms about crypto mining, saying that they need to get out of it and it's considering imposing punitive measures in the near term. So that really did unnerve the market, and we had a pretty big drop. So crypto is definitely at the lows for the past 2 or 3 weeks.
So, Joanna, what kind of longer-term implications will actually all of these factors have?
Yeah, it's a little bit hard to say because China at this point, so many firms have gotten out of China. Many of the miners have gotten out. So if it is true that these big state-owned enterprises are doing any crypto mining and this has an impact, that would be pretty interesting. But a lot of places have gotten out. So China is not what it once was in terms of a factor. So we'll have to see if it does cause any longer-term issues. But still, crypto bulls are talking about that 100,000 level for the end of the year. So they're pretty undaunted by it. But it does mean some choppiness in the near term, probably.
Joanna, this is probably the most difficult question I'm asking all day. What's the near-term outlook for crypto prices?
Yeah, so it is likely to be somewhat choppy here. And of course, crypto is quite volatile. It can go down just as easily as it can go up. It's easy to see a drop of 10%, 20%. So actually, these drops are not all that severe relatively. They happen every few weeks. But again, the bulls are saying 100,000. There is the round number level of 60,000 on Bitcoin. It's just a little bit above that now. We have resistance around 65,000. So we could see we're likely to see some choppiness, but also the fourth quarter does tend to be good for Bitcoin. We have seen a lot of bigger holders continuing to buy. So the market could be underpinned for the next few weeks at least.
Joanna, thank you so much. Joanna Ossinger there for the very latest on cryptocurrencies. Now, coming up, we speak to the Chief Operating Officer of one of the world's largest asset managers. Timur Hayat from PGIM joins us next. If you have any questions for him, you can just IB plus TV Go, or you can also tweet me directly at Lacqua. Now, I'm here in Singapore from the Bloomberg New Economy Forum. Starting tomorrow, we'll be in conversation with David Solomon, Goldman Sachs, Sundar Pichai, the Alphabet and Google Chief Executive Officer, amongst others. This is Bloomberg. Biden and Xi cool down hostilities while the two leaders call for cooperation in a longer than expected summit. Andrew Bailey feels uneasy about inflation while evidence mounts that a shortage of workers will actually drive up British wages, the pound gains, after UK unemployment falls. And JP Morgan sues Tesla over a $162 million payment as Elon Musk dumps more stock in the electric car maker. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Singapore. Over the next few days, we'll bring you the Bloomberg New Economy Forum. But first thing is first, let's check in on the markets. A lot of the focus, of course, is on the possible reappointment or not of Jay Powell as Fed chair. That could move the markets, although the replacement that we've been talking about could be Lael Brainard, very dovish, and not much of a change in tone from what we heard from Mr. Powell. The focus also on this, of course, President Xi and President Biden seeking cooperation, longer than expected summit. Stocks are pretty much steady. We did see a bit of a liftoff in Chinese renminbi. The yuan actually approaching its strongest level since 2018 on hopes of easing tensions. And overall, you can see the markets liking what they're seeing. The focus also on UK unemployment, better than expected. And you can see cable at 134.63. Now, let's discuss the markets with the COO of one of the world's largest asset managers. PGIM, formerly Prudential Asset Management, manages more than $1 trillion. And Timur Hayat plays a crucial role in its success over the past 8 years. His latest Megatrends research piece is on the investment implications of technological disruption in the service economy. Well, Timur Hayat, welcome to Bloomberg. Thank you so much for joining us. And I know you've just traveled to London, so it'll be also interesting to know your thoughts on the various regions. First of all, this technological disruption, are we underestimating or overestimating the effect as we get out of the pandemic? What's here to stay?
So the pandemic clearly accelerated, Francine, technological disruption and just the pace of people adopting technology across all sectors. And we really dug into services this time because services are about 75% of employment in developed markets, 50% of employment in emerging markets, and about 2/3 of global GDP. And it's been later in services than in manufacturing and retail. And we think it's going to be pretty disruptive, but it's going to play out in a quite different way than it did in manufacturing and retail. For starters, the big incumbents have seen the movie play out already. They have much more regulatory protection in healthcare, in financial services than some of the early places where the tech startups really dominated and decimated the incumbents. Yeah. And then customer acquisition costs are just so much more expensive. You don't change your doctor, you don't change your financial advisor the way you might change the place where you buy, your shampoo. And so we think a bunch of incumbents, companies like JP Morgan, Santander, others who are investing in technology, buying companies like JP Morgan bought Nutmeg, Aviva bought Wealthify, are going to be actually part of the winning set. But there are 2 or 3 areas where a bunch of new disruptors will come in, even in services. And that's also part of our focus of what research we did and the investing we do.
Yeah, and Timur, this is, I guess, one of the big questions, actually. If you look at European valuations compared to U.S. ones, it does mean that, it seems that investors just want the big sexy names that are disrupted, that are willing to pay a pretty hefty premium, even for companies that haven't made a profit yet. And it's laggards, it's the old economy that will be left behind. How long does this last?
I think you're absolutely right. I mean, we are in a bubble, obviously, in cryptocurrency. You were just discussing probably in equity markets. And we see three kinds of opportunities, Francine, in this sort of tech disruption in services. The first is, you'll probably have to go into private markets as an investor a little bit for this. But the neobanks and the new payment platforms that are kind of taking over from the MasterCards and Visas are actually spaces where there is an opportunity to go after new customers that banks never went after, and where the regulatory hurdles are less, and where with buy now, pay later, you can actually glom onto the customer bases of big retailers rather than having to build your own. So that's a space for opportunity. Then there's emerging markets. 90% of emerging markets still operate in cash, like India or Mexico. And there is an opportunity to kind of leapfrog all that banking network that was never built there. And there are a whole range of companies, Mercado Pago, others that are essentially taking payments away from the old banking network into a new one. And then we are pretty bullish also on just the sort of infrastructure, the pipes and plumbing that underpins this. Companies like Connection in London, for example, that sort of provide logistics infrastructure. The kinds of people who, when you make a call to your Uber driver, provide the phone call connection that anonymizes both sides. That pipe and plumbing all the way to data centers and fiber networks is going to be a very safe place and probably less overpriced than some of the big names, Francine, that you mentioned everybody focuses on.
But Timur, is there actually a danger that chronic underinvestment in old economies, such as energy, even as we go into transition in certain parts of fuel sources, means that actually we could see shocks like we're seeing in energy elsewhere in the economy?
I think coal in the US as well now, right? You see the pricing because of the supply shortages. So I think you're absolutely right. Investments in old fossil fuel energies, particularly coal, is going down. I think, Francine, that's actually the right thing. And our view is this is more transitory. This is kind of pandemic supply chain issues and pent-up demand catching up. And ultimately, the investment is going into this slow sunset, but very important transition into the non-fossil fuel economy. And there we are seeing tons of investments, tons of investor interest, tons of opportunity.
Timur, where do you see, the biggest misprice? I don't know whether it's a bubble. We call it a bubble if it's not burst yet. Or is it something that makes you very uneasy and unnerving on the markets right now?
I think it's this whole cryptocurrency space, which I very much distinguish from the DeFi space and from digital currencies. That is one area where I think hedge funds on the other side of retail investors are making a lot of money by trading cryptocurrency. But this sort of speculative rush there is one area. I do think, I'm glad it's calmed down, but SPACs is probably another area where there's a bit of a bubble, although it's calming down now. And I do think there are a bunch of technologies that are probably overhyped in the media versus the real opportunity now where investors can make a return in their lifetimes. As one example would be the public blockchain. I'm very positive on private blockchains and transactions, but the public blockchain with its ESG issues, with just kind of anti-money laundering and lack of clarity on customers, we think is a very long-term opportunity. And also autonomous vehicles. I think a lot of money has gone in, and it's going to take a long time for that to turn into reality.
Timur, you also beautifully laid out actually some of the investment opportunities when it comes to technological disruption in the services economy. You mentioned actually something about regulation. Do you think regulation is coming to an extent that we're not realizing that could really disrupt that world?
Absolutely, Francine. You hit on a key risk here. I think I divide it into two areas. Developed market regulation, where everything from the algorithms behind AI and their potential biases, privacy laws, just the testing regime to get autonomous vehicles up. You saw after the accident in Arizona in the US, just how much the regulators kind of kicked in terms of, slowing down that testing cycle. So I do think sort of what we call techlash in developed markets is going to be a big issue. And then as China in particular fights inequality and the rise of these new billionaires and tries to protect its middle class. I think that's the driving force behind a lot of what you see as emerging market regulation. And then, of course, you had India, which banned 59 Chinese apps, including TikTok. So I think you're going to see more and more regulation, and every investor should have someone focused on regulatory risk as a key risk as they invest across services or across the broader technology sector.
Timur, thank you so much. Timur Hayat there, Chief Operating Officer at PGIM, stays with us. So we'll talk a lot more about some of the emerging economies as well. Now, coming up, Saudi Arabia, Russia, and the UAE signal OPEC Plus will continue raising oil output cautiously. So we return to ADIPEC in Abu Dhabi shortly. We also have this headline coming in on the Bloomberg terminal saying Germany temporarily suspending its Nord Stream 2 certification. This could be because of pressure from elsewhere. We'll look into that and we'll dig a little deeper. This is Bloomberg.
The energy industry is in very huge transition, very exciting times, obviously. Everybody's making an adjustment to make sure that we meet the net carbon zero target of 2050. For some countries can't make it at 2050, but obviously the whole energy industry is adjusting, it's changing. Businesses are seeing realities that are with us. And of course, it also creates new opportunities that we can see today. Business focus is changing. People are going into more of gas development across the globe, and also bringing on table blue hydrogen and also green hydrogen, and so much is happening, and we see as a national company a great opportunity unfolding.
You've spoken in the past about Nigeria's production problems. Currently, you're at about 1.45 million barrels per day, which is about 200,000 barrels a day lower than kind of where your capacity theoretically is. How quickly can you ramp back up and get to that?
Yeah, it's very obvious that by close of the year, we would get back to the 1.7, 1.8 of the crude only. Of course, as you may be aware, when we mention this figure, we're only talking about the crude oil only. We do produce condensate, and when you combine all this, we can easily hit the 2.0 by the end of the year. But the fact is very clear. During the COVID-19 situation, we shut down some of this well. Of course, they naturally don't get back when you want them and how you want them. And that's the work we're doing. And of course, we do have some challenges around the facilities. These have been taken care of, and there's enormous work and intervention going on that will get us back before the end of the year.
To what extent has an absence of new international investments contributed to the challenges you have today? Yeah,
obviously, the COVID-19 challenge to low investment in the oil and gas sector particularly. And of course, this coming back, particularly for our country, there was some level of lack of clarity around our fiscal environment, and that has been sorted out with the passage of the Petroleum Industry Act. And the meaning of this is that we have seen very good traction with our key partners around, particularly on the deep offshore asset development. And we think things will pick up, and obviously, there are a number of engagements going on that are pointing towards a potentially return back to the full investment situation that we saw prior to the COVID-19 period.
Well, that was Melek Chiari, the managing director of the NNPC, talking to Youssef Gamaldin at ADIPEC. Youssef joins us now from Abu Dhabi, where he's, of course, been speaking with some key figures of the oil industry. Youssef, I'm not going to ask you about the price of oil, though I really want to, but the debate on whether the U.S. will actually tap its strategic reserves is underway. What have you been hearing?
Well, Francine, we've heard all kinds of opinions on this all across the spectrum. But what is clear is that it might not make as big as a difference as maybe some political officials would like to see. We understand that release from the strategic petroleum reserves is usually done in crises, and that's what the Indian energy minister said. There's no point in releasing reserves, whether in the United States or elsewhere, because we're not in that crisis situation. But with that being said, I just want to highlight some of the numbers we just got moments ago from the IEA. The world oil demand forecast pretty much unchanged at 99.7 million barrels per day. But what caught my attention and some of the officials just around me here is the supply side of the forecast, which has been increased by 1.5 million barrels per day just in November and December. The bulk of that is going to come from the U.S., from Saudi Arabia, and from Russia. And what that means is that the supply crunch that the market's so worried about is going to start easing, and it also fits into the OPEC Plus narrative. They've been saying our current regiment of 400,000 barrels per day every month, that is going to be enough for the market to start easing and prices to start becoming more sustainable. Francine.
Thank you so much, Yusuf Kamaldeen there for us in Abu Dhabi. Now, we're just getting some breaking news out of Nord Stream 2. Now, first of all, there has been quite a lot of talk, especially fighting talk from Boris Johnson and the UK, saying that European nations must choose between mainlining Russian gas and defending peace in Ukraine. Now, separately, but maybe the market reaction thinks that it's linked, there was a Bloomberg headline that actually crossed the Bloomberg terminal saying that Nord Stream 2 certification has been suspended on a legal form change in Germany. Now, from what I can understand, this is actually a procedural change. So it doesn't mean that they're backing away because they're worried about Ukraine or trying to punish Russia or send a message. But we understand through the statement that the German Federal Network Agencies says that there's a certification procedure. It sounds quite dull, but actually these things can take time due to a change in the legal form of Nord Stream 2. From what I understand, the procedural will actually remain suspended until the main assets and human resources have then transferred it to the subsidiary. So it seems like a procedure that's still sending the gas price higher. It was gaining some 12%, now getting some 9%. So I wonder whether there's a little bit of a mismatch on the procedure and actually markets interpreting it more as a political statement. I guess we'll have to wait and see to see what happens. Now, still with us, Taimur Hayat. He's Chief Operating Officer at PGIM. Taimur, there's a lot of questions actually on the energy transition that we mentioned, on some of these supply shocks and what it means for the world economy. But overall, where are you on the world economy? Productivity is advancing, I guess, because of the technology being used that we were talking about. Are you confident that the economy from now will not relapse into some kind of recession?
I think there is a link back to inflation, Francine, and the main risk to our fairly bullish view on the global economy as it bounces back from the pandemic. I think each subsequent wave has a smaller effect on the economy, is potential Fed and other central bank overreaction to inflation risk. And an overreaction is the one thing that I think could topple the world back into a recession. But other than that, we are fairly bullish. And I think underpinning that view is our view that inflation is transitory.
Taimur, what if it isn't transitory? I mean, this is, what the market has to grapple with day in, day out. What does a policy mistake look like right now? Is it holding on to, those interest rates, to not hiking soon enough, or is it the reverse?
I think it's definitely the risk of hiking too soon, Francine. And the reason we believe the inflation risk is transitory, but still kind of have that tail risk scenario you and I are talking about is, the post-pandemic world is not going to be different from the pre-pandemic world. And there were big downward pressures because of wage reducing or wage non-enhancing technology, because of an aging global population. And those factors are ultimately going to act as a downward pressure on pricing. And everything I see, despite the kind of areas like energy and labor markets where there are definitely shortages and price increases that are hitting us all, everything I see is because of pent-up demand and because of supply chains that still need to unravel, admittedly taking longer than one might have initially thought. But once they work themselves out of the system over the next 12, maybe 16 months, we think we're going to see inflation pressure go down. But there is the risk that central banks overreact, and that is, I think, the biggest risk to the global economy.
Taimur, thank you so much for all of your time today. Taimur Hayat there, COO at PGIM, joining us from London. Now, coming up, JP Morgan sues Tesla. The U.S. bank goes to court over $162 million payment. Elon Musk also dumps more stock in the electric car maker. We'll have plenty more on Tesla shortly. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Singapore from the Bloomberg New Economy Forum. Now, Elon Musk sells more Tesla shares. Filings revealed that Musk offloaded about $930 million worth of Tesla yesterday. That adds to the $6.9 billion he already sold last week. Well, joining us now is our Bloomberg Daybreak anchor, Danny Berger. Danny, good morning, good afternoon. How close is Musk to actually selling the 10% he had promised following that Twitter poll?
Francine, he still has a very long way to go. Yesterday's sale was only about 5%. If you're assuming he sells 17 million shares, which would get him to that 10% threshold. So about 57% of his shares are left. He's only sold about 7.3 million. Now, this was through exercising options and then selling those shares themselves. A lot has been made about this tweet, the 10%, whether it was just already planned to be sold and it just worked with the timing. He did talk about some of these sales back in September, saying that he had a large block of options expiring and he planned to exercise them and sell around the end of the year. Despite all of that, Tesla shares have fallen about 17% since he started on this latest trajectory of selling. Let's get you a pre-market look at Tesla. We're down about 1.4% again this morning after shares had already fallen more than 1% yesterday, Francine.
Yeah, I have to say I was, mesmerized with Twitter and some of the massive trolling by both Bernie Sanders and Elon Musk. A new legal complaint. Now, away from the Twitter trolls, a new legal complaint, Danny, was also filed against Tesla yesterday. JP Morgan suing Tesla over unpaid warrants. But what exactly is the dispute here?
Well, a lot of Tesla and Elon Musk news over the past week, to be sure. Well, Francine, it all centers around this perhaps infamous tweet from Elon Musk talking about considering taking Tesla private, funding secured. This was back in 2018. But at the time, JP Morgan had sold warrants, had derivatives to Tesla. Basically, they had a strike price. If Tesla closed above that strike price, then they'd have to pay the bank. But Elon Musk tweets this, and JP Morgan says, okay, this constitutes a significant corporate event. That allows us to lower the strike price. In other words, there's more room for Tesla having to close above that level and pay them. They say that they were within their rights to do this. Tesla at the time took issue with it. We haven't heard from Tesla since JP Morgan filed this complaint yesterday. But Francine, you and I talked about this earlier. This dispute is over $162 million for a $1 trillion company and a big mega bank. That is just peanuts. So it's pretty significant that this fraught relationship is happening over what for them is a pretty trivial amount.
Yeah, so is this because they don't want to set a precedent, Danny? Is it because it attracts attention because it's Tesla? Like, what exactly is behind it?
It is entirely possible that that's behind it. Again, this is really as much as we've seen from JP Morgan, this filing, that they've refused to settle at the contractual strike price and pay in full what it owes to JP Morgan. So it could be a Tesla thing in itself, because we know there is a lot of volatility around Tesla. There's a propensity of Elon Musk to tweet, and sometimes for that to move share prices, which of course the SEC back in 2018 got on Tesla's price. But of course, JP Morgan has a lot of these type of contracts. So, again, this could be a wider thing beyond Tesla just setting a precedent. But so far, again, the commentary we know about this, which stems from back in 2018, is this filing, and Tesla has yet to respond, Francine.
Thank you so much, our Danny Berger, our Daybreak anchor. Elon Musk tweeting, changing their share price. We've never seen anything like it, Danny. Now, Bloomberg Surveillance Early Edition continues in the next hour. Anna Edwards is in London. Matt Miller will be in Berlin. And I think Danny Berger will also be in London. Now, the focus firmly, of course, on the markets. I'm here in Singapore for the Bloomberg New Economy Forum. It starts tomorrow, and over the next few days, we'll be speaking to some of the biggest names in business, including Sundar Pichai from Alphabet, David Solomon from Goldman Sachs. So for the moment, stocks are pretty much steady. We're also expecting an announcement imminently on the Fed chair, so look out for news on Jay Powell or Lael Brainard. This is Bloomberg.
Generally, we've already seen this year that equities are going to be one of the most resilient asset classes.
You need to look for older sources of diversification than just what equities and bonds can offer you. I actually think there's going to be much more potential for regional diversification.
I think emerging market investors are really watching to see what happens with China. It's too big to ignore.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It is 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. China's economy stabilizes. Retail sales climb, so does industrial output, but a real estate slump shows the recovery isn't on solid ground just yet. Plenty to talk about. Joe Biden and Xi Jinping prepare for their first virtual summit, but expectations for the meeting are low. And breakthrough at the climate conference. Countries agree to end fossil fuel subsidies and boost their climate targets sooner, but they put off the hardest decisions until later. Welcome to the programme, everybody. I'm Anna Edwards, live in London with Tom McKenzie. Matt Miller is with us in New York. Kailey Leinz is off this week. And Matt, when it comes to the markets this morning, there is so much to look ahead to, so much potential for volatility later on this week. It sort of feels like maybe the calm before the storm.
Yeah, it is a little bit calm, actually, although we got some data out of China that pushed in kind of both directions, and we're going to hear a lot more about that from TMAC and from Enda Curran as well. The CSI 300 right now down. China had better than expected retail sales in October, but it also had an easing of fixed asset investment, which is concerning on the property side. Nonetheless, throughout the rest of Asia, big gains. I mean, you see the Kospi in South Korea up more than 1% at the close. The Nikkei was up more than 0.5%. So as you get closer to the mainland, things cooled off a little bit. I will point out that we had a continued recovery in this dollar junk debt that all of these property developers have issued. Ever since the Evergrande saga, I've got a chart here. Ever since the Evergrande saga, it just comes down. And I'll welcome our radio listeners and tell you, this is a chart that shows just a big drop in the debt, but it's bounced up a little bit at the very end of the chart. So this recovery continues. We'll keep our eye on that. In terms of what's going on in the U.S., take a look at futures here. It's interesting because we see gains in U.S. futures. They're slight, selling in gold and selling in crude as well, although you do see investors buying bonds a little bit. Here's Bitcoin up 2.5%. Right now, just under $66,000, and there are going to be a lot of movers on Bitcoin in terms of miners, in terms of exchanges today. So that's something to keep an eye on. But what I found really interesting was the real yield. Even as the 10-year kind of bounces out of a bottom right now, the real yield is at the lowest level that we've seen it, now down again to negative 120. And if you keep your eye on that, it's almost at a record low. So maybe somewhat of a concern. Tom?
Yeah, Matt, in terms of what we're seeing in Europe, it's pretty muted today, but the picture is that you've had 6 weeks of solid gains across the European markets, very much still at those record levels. Bit of divergence in terms of what you see in the UK. We're waiting for labour data and wage data out tomorrow, which will give some guide towards that meeting in December for the Bank of England after the surprise in November. It's more pronounced in terms of the gains that you're seeing on the continent. France gaining 0.3% in terms of the CAC 40. DAX also up by 0.1%. Similar territory over in Italy. We're also looking ahead to the testimony from the ECB's Christine Lagarde later today in front of the European Parliament. What will she have to say about inflationary pressures as they look ahead at the ECB to that very important December meeting as well? By the way, Morgan Stanley, the team there, suggesting that as you look to 2022, you want to reduce your exposure to US equities and bulk up on European equities and Japanese in terms of where we are in the cycle. Let's see how things are playing out then across the assets. Again, the benchmark, you're up 0.1% at record levels, but looking for catalysts, it seems, across these European markets. Euro-dollar is at 114. Brent crude under pressure, down by 1.3%. We're still waiting for clarity as to what the Biden administration will do in terms of those strategic reserves. Iron ore is also lower by 1%. We have better data out of China, as you're saying, but pressure still on the property sector. That demand for iron ore still a concern for some. Anna.
And Tom, you were just mentioning Christine Lagarde will be speaking, and she is doing so just now. We're getting some headlines dropping from her address today, saying that growth momentum is moderating somewhat, talking about the Eurozone economy here, saying supply bottlenecks are weighing on manufacturing, and that's certainly something we've seen. And a theme we will return to shortly, she says that COVID essentially isn't over. The pandemic challenge isn't over yet, and we'll certainly talk about that in a European context shortly. Now look at taking a look at some of the events that are on our agenda for the week ahead. US President Joe Biden and China's Xi Jinping meet in their first virtual summit tonight. There's plenty to discuss, including the origin of COVID-19, human rights, and the future of Taiwan. How much meeting of minds will there be on any of those subjects? The White House says President Joe Biden will sign the Bipartisan Infrastructure Investment and Jobs Act today, long awaited. US retailers report this week, and we'll also get US retail sales data, rising prices and shortages due to Future supply chain constraints mean retailers could face a tough quarter. We saw a 10-year low in consumer sentiment during Friday's session. That's crucial, of course, given the role of the consumer in the United States. And on energy markets, energy ministers, policymakers and leading execs in the oil industry are gathering at Abu Dhabi's conference, International Petroleum Exhibition and Conference, also known as ADIPEC. We'll be live there shortly for the latest on what seems to be an unmoved OPEC Plus grouping. They don't seem to want to change their policies when it comes to production levels then, Tom.
Yeah, and switching focus, or at least we discussed this, the China data, which came in more positive than some had expected in October. That's as retail sales climbed and energy shortages eased. But a slump in property and rising COVID outbreaks show the recovery is not yet on solid ground. Let's get more then with Enda Curran, Bloomberg's chief Asia economics correspondent. Enda, your key takeaways from this data, which broadly came in, as we said, above the estimates, but there's still concern about the fragility of this economy and the recovery in China.
Exactly right, Tom. Clearly some upside surprise here, better read on retail sales, industrial production helped by, as you say, what looks like an easing of the energy crunch. Some factories had been complaining of power shortages, but that seems to be working its way through the system now. But, you know, economists were quick to say, wait a minute, retail sales may have been impacted actually by higher prices, by consumer inflation. That's probably what's driving up the headline figure there. And on the broader story, you only have to look at other data released today, which show that house prices continue to fall. So that means the real estate sector is still under pressure. We know the big developers are under pressure in the credit markets. So I think today the net takeaway was, sure, better headline readings, but the bigger picture story of China's economy losing momentum into the year end is very much intact.
And we're going to see a summit with President Biden and President Xi, at least a video conference summit. What does Xi want from this?
Well, clearly expectations are being managed by both sides, really. There hasn't been much in the way of anything that would suggest a major breakthrough. We know that Xi is coming into this, Matt, from a fairly strong position after last week having that all-important party plenum, more or less cement another term for him if he wants it. You know, obviously on the table, China have been explicit in the past. They would look for some breakthroughs on trade. They want an end to US tariffs. There isn't really any indication, though, that we're going to get breakthroughs like that. It's possible there could be some meeting of minds in terms of people-to-people flow, in terms of visa restrictions. But, you know, in terms of the laundry list of concerns between both sides, from Taiwan to Xinjiang to technology, I don't think anyone's going to expect a major breakthrough in one phone call. I think the big takeaway, especially for economists watching this, is that at least the leaders of the world's two biggest economies are speaking to each other, but that might be about as good as it gets.
Yeah, we did see at least at the COP26 summit that these two nations can work together when they want to. So we'll bear that in mind. Enda, thank you very much. Enda Curran, Bloomberg's chief Asia economics correspondent with the latest on China themes. Anne-Marie Hordern, Bloomberg Washington correspondent, joins us from D.C. for what President Biden hopes to accomplish from the summit then, Anne-Marie. We've heard the Chinese take this morning. What is it that the Americans want to get out of this?
Well, like Enda's saying, there's really no clear deliverables, but what U.S. officials say is that they want to at least be able to have a frank conversation on the leader level between President Biden and Xi Jinping to discuss rules of the road and how to basically put frameworks and guardrails on this competition. But as Enda's saying, there's going to be a litany of issues that are likely going to come up, whether it's trade, whether it's Taiwan, whether it's human rights. One thing we do know that's likely not going to be decided at this meeting is the U.S. consulate in Chengdu and the Chinese consulate in Houston that were closed recently. But this is really the first time they are meeting face to face. And what U.S. officials think going into this meeting is that President Biden comes in with a very strong hand off of the meetings he had with allies and partners to try to approach China in a multilateral approach at Rome. And also the fact that he's going to be signing in an infrastructure agreement. He was able to get bipartisan support in the United States just hours before he enters this meeting.
Anne-Marie, on another note, it looks like Elon Musk continues to taunt Washington senators. Ron Wyden was the first last week, and now Bernie Sanders. Has there been any reaction from D.C.?
Well, I think this is something that is just going to continue. This is not the first time that Elon Musk is going to taunt or chide U.S. senators, and it's certainly likely not the last. But also, it's definitely not the last time you're going to hear from Senator Sanders saying that the wealthy need to pay more in taxes. And potentially hear more about it this week as the House and Senate come back, and the House has to work to try to pass the Build Back Better, and the Senate is going to get that next agenda and start marking it up. But this is also from Senator Sanders in March, who said that the wealth of Elon Musk and the likes of Jeff Bezos is, quote, immoral. So potentially Elon Musk hasn't forgot about that, and he might continue his trolling.
Okay, Anne-Marie, yes. I mean, this conversation went on for hours. I don't know if it's not quite a conversation, is it, when there's only one side speaking? But Anne-Marie, thank you very much. Bloomberg's Anne-Marie Hirson in Washington. Now over to COP26. After 2 weeks of talks, negotiators from almost 200 countries clinched a deal over the weekend that aims to reduce the use of coal and boost climate targets sooner. Let's get more from Bloomberg's Maria Tadeo, who's been camped out in Glasgow for much of the past 2 weeks. Maria, what is the significance then of this deal? So much has been written about it, what it does and doesn't include and doesn't mean. What conclusions can you draw?
Yes, Anna, and that is always a difficult question after you cover a COP26 meeting. Was this ambitious enough? Was it good enough? And will it make a difference when it comes to climate change? What we do know is that there's three things that stick out with this deal that was approved here in Glasgow on Saturday. One, of course, is that the 1.5 degrees Celsius temperature check, that still stays alive in the document. We also have what is the most explicit until now call to phase down coal and other inefficient fossil fuel subsidies. This is a breakthrough of sorts. It is true it was watered down by India from phase out to phase down, but nonetheless, some of the delegates that I spoke to after the deal was agreed said that it is sending a message that the coal economy has no future. And then, of course, you also have the establishment for a framework of carbon emissions trading, a big global ETS. Scientists have said that if you want to remove carbon emissions, you have to be able to trade the credits, trade the offsets, and measure it correctly. This could be the first step. But again, Anna, the question is the implementation. That is where the real deal will show. And of course, only time will tell whether or not they succeeded in toning down global warming and the heating of temperatures on the planet.
Maria, thanks very much. Maria Tadeo there reporting from Glasgow after an agreement has been reached. Let's take a look at some of the stocks in the pre-market this morning. Tesla is one we're going to be paying close attention to. As usual, Elon Musk, as we were just talking about with Anne-Marie there, tweeting that he might want to sell more shares, almost asking Bernie Sanders to tell him to. That's maybe not a great sign, and they're down in the pre-market this morning. Boeing, on the other hand, is up, and there's been good news out of an air show with Airbus saying that the recovery is on track. They have an order for 255 of their wide-body jets. Boeing also looking to restart production of its 787 Dreamliner and looking to get recertification of the 737 MAX in China. So investors are positive on Boeing this morning. And then IBM could be creating or could have created, according to Axios, the first quantum computing chip. It's capable of computing like 127 qubits of data. I have no idea what that means, but it's a lot more than a regular computer, apparently, and the stock up 1%. So keep your eye on Big Blue this morning, Anna.
Okay, yeah, are we years or decades away from a fuller role for quantum computing? It seems to be some of the conversation coming out of that article. Let me just recap some of the lines we're getting from Christine Lagarde of the ECB. She's speaking to European members of Parliament. She's going to be taking questions shortly, but some of her prepared remarks already hitting the tape. She said already this morning that the growth momentum in the Eurozone is moderating somewhat. Supply bottlenecks are weighing on manufacturing, which we've been following for a while, of course. She says there's no evidence, and this is interesting, that faster inflation is feeding into wages. So that's good news if you're looking to not see contagion effects into the wage story. And conditions for rate hikes are very unlikely to be met in 2022. That is something that the ECB has said before. They continue to push back against market expectations for rate hikes. We'll continue to monitor all of that for you. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards and Tom McKenzie in London. Europe is battling a fourth wave of coronavirus. The rate of infections in Germany hit a new record high, a record high for the entire pandemic. Meanwhile, Austria is putting unvaccinated people under lockdown, although it seems pretty light. Joining us now from Vienna is Bloomberg's Jonathan Tyrone to talk about what's going on there. Jonathan, it's pretty shocking that this new wave has come back, especially in the Germanic core of Europe. Why?
Well, it's the same thing that followed along the third and second waves. Gets colder, people go inside. Unfortunately, in Austria and parts of Germany, the vaccination rate isn't as high as the authorities wanted it to be. Here in Austria, we're about 64%. Vienna, the capital, is doing fairly well. Our incidence per 100,000 people here in Vienna is about 400. It's in the provinces, especially along the provinces that border parts of Germany, where you have a real serious spike in cases, 1,200 incidents per 100,000 people.
Jonathan, why is there a reluctance amongst some in Austria to get the vaccine? What is holding that vaccination rate back, and how is it breaking out across the rest of the Eurozone in terms of infection rates?
Yeah, well, I mean, there's a strong but vocal minority of people that call themselves lateral thinkers who are protesting frequently on the streets against face masks, against the vaccine. The government yesterday announced that the new rules, which are putting a lockdown on unvaccinated people, preventing them from circulating in places like fitness studios, cinemas, retail shops. You know, this is all intended to drive more people to vaccine stations to get vaccinated. The early indications based on the lines at vaccination centers is that more people, in fact, are going. There's quite a long line at open stations.
Okay, so it is maybe having the impact that the government want it to, Jonathan. I mean, just tell us a bit more about the Austrian rules here, because they are, I don't know if it's probably not the first time in the world that we're separating people into vaccinated and unvaccinated. There are plenty of other instances of that, but there's not much of it in Europe.
Well, I mean, it definitely carries a political risk. I mean, it's the equivalent almost of like a stop and frisk campaign without the frisking, because the police have made very clear, the Interior Ministry made very clear yesterday that everybody is subject to being stopped by the police. They're going to be asked whether they have a vaccine passport. If they're caught going into a place where they shouldn't be, an individual will be fined 500 euros, and the business owner or proprietor will be fined 3,600 euros if they're caught allowing people in who shouldn't be there. So, I mean, you know, there's a broad security element to these new rules, and we'll see how that plays out politically and public health-wise in the days and weeks ahead.
Jonathan, thank you very much. Thanks for joining us. Bloomberg's Jonathan Tyrone joining us there from Austria with the latest on the fight against the virus there. Just getting some other headlines coming through at a European Union level. The EU backing new sanctions powers on Belarus over migrant flows. And this goes back to a story we've been covering for a week or so about a buildup of migrants on the Belarus-Poland border. And the EU has suggested that the Belarus president has been putting them there. The Belarus president denies that. And we have to look for details now then as to what these new sanctions powers will include. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards with Tom McKenzie in London and Matt Miller in New York. Kailey Leinz is off this week. And Tom, really interesting when you're looking at the European equity markets, not moving anywhere very fast at the sort of aggregate level. But if you dive down into the details, basic resources, a real laggard, and that always worries the London market.
Yeah, that's a drag on the FTSE 100, and certainly the pressure on iron ore as a result of what we're seeing in China. Yes, the economic data was more positive than the estimates, but you break it down, you look at what's happening in the property sector beyond all the chaos around Evergrande, and there is no sign that the officials are going to be walking back on that. So that demand for iron ore, which feeds into the real estate sector, is what's weighing on that, and that's affecting basic resources this morning.
Yeah, absolutely. So, and that ties in with inflation conversations, doesn't it, Matt? And it was really interesting to see on Friday the consumer sentiment data touch a 10-year low in the United States as a result of everybody's concerns around inflation going higher. Inflation seems to be talked about a lot on the Sunday programs, the Sunday talk shows. Inflation still very much part of our conversations as you look ahead to the start of the U.S. trading day.
Absolutely, and I have a great look at what inflation is doing to yields. First, let's take a look at what's going on in the markets. As you mentioned, we have gains in Europe, although they're incredibly slight, only 7/100ths of 1%. So the inner machinations of the stock 600 are interesting, Anna, but if you look at just the benchmark index, not so much. S&P futures up about 0.2%, so we could see stronger gains here than we do in Europe. And the U.S. 10-year yield not doing very much, but look at this, 154.26, and here you see crude is down 71 cents. 154.26, but when you factor inflation in, I've got to look at what real yields are doing. The real yields are coming down to lows like we've only seen a couple of times previously, and that over, of course, the pandemic period. If you were to look at a chart on just the 10-year yield, you'd see a dip for those of us listening on radio in 2020, and then a bounce back. But if you factor in inflation, that dip keeps holding us down to negative 120 basis points. So I think the real yields are really important and really interesting to look at, Anna.
Yeah, absolutely. Real yields, also real earnings, real EPS, and what is being delivered there by corporates, also something worth looking at. And I have another chart that really illustrates that point, Matt. And for those listening on radio, I'll just describe what we're seeing here. This is S&P 500 earnings yield setting a record low after adjusting for inflation. So if you adjust this for inflation, this is the real earnings yield on the S&P 500. You'll see it's only been negative in the 1970s on 2 occasions, and now, basically, I mean, very short periods in the early 2000s or late 90s and mid 2000s. But essentially, we are in a new era when it comes to looking at the earnings story here. And I just wonder what this does to our assessment of where we invest and where we put our money if this is what we're seeing from corporates. Let's get to our next guest then and get some perspective on this. Ed Clissold, Ned Davis Research Chief US Strategist, joins us. And Ed, how much? I mean, we can adjust all sorts of things for inflation. Today, I'm adjusting the earnings yield story for inflation. How much of is this? This just really illustrates the damaging effect that inflation can have, not just on consumer sentiment, as we saw on Friday, but also on the earnings story out of corporates.
It certainly does. And I think that the big question is how much can companies pass on to their customers, or how much do they have to eat in terms of their profit margins. So far, profit margins are at record high. So companies are able to pass it along. And as long as that's the case, it's probably going to be okay for equities. But at some point, that is going to become somewhat of an issue, and it's probably going to hit earnings growth in 2022 as a result.
In terms of the inflation effect, we heard from Christine Lagarde, who runs the ECB earlier, that she doesn't think it's going to stick. Is it different in the U.S., Ed?
Well, ultimately, it's going to be transitory, and that's the buzzword that's probably gotten a lot of flack, and justifiably so, because transitory keeps getting longer and longer. But we've been in the camp for a while that transitory is going to mean a year or longer. It's probably going to be at least 18 months before the headline inflation numbers in the U.S. get close to 2%. So it is going to be a little bit sticky, but this ultimately has to do with the size of the stimulus that has been passed and supply chain issues. So ultimately, we're going to see inflation come back down, because the bigger things you're talking about, potential GDP growth, demographics, and the like, those are supporting lower inflation. So that's probably the end game. But when you're in that period, Matt, even since 1980, when inflation peaked in the U.S., when you get these spikes of inflation that have all been transitory by definition, because inflation keeps going down, stocks have paid attention. The S&P has struggled when you get the CPI a lot above its 5-year average, which obviously it is right now.
So, Ed, how do you inflation protect your portfolio in the here and now?
Well, so I think it's a mix of different sectors. You do want some resource sectors that can take advantage of higher commodity prices, but also focus on companies that can pass those costs through and have pricing power. So those are going to be the areas we would focus on as well.
Okay, what about defensive stocks? You point out they've underperformed. Are we getting to a point where there's going to be a reversion to the mean? Is that where you get in?
Yeah, it's probably more of a 2022 story. The momentum for the stock market looks pretty good into year end, so it's more of a risk-on environment. But if you look at defensive sectors, we call them shuts. So staples, healthcare, utilities, and telecom. They are some of the most oversold readings we've ever seen. Even at the early stages of a bull market, where they tend to do poorly, they're even worse than they have at other bull markets at this point in the cycle. So once the environment turns to more of a risk off, the potential for them to outperform is going to be quite significant. But again, that's probably more of a 2022 story than an end of 2021.
Ed, when you look at energy stocks and the energy sector, another sector that some people have suggested has underperformed, do you think COP26 and other summits like it, all the politics around climate change and energy transition, is putting effective guardrails around that sector and allowing people like you and others within the investment space to work out what is and is not going to be, the right kind of investment in this transition?
Yeah. It's ironic that all of the talk about green energy is actually causing energy prices to spike, because why would an energy company want to invest in a multi-year project if they don't know they're going to be able to reap the benefits from it? So that's the conundrum. That's why you've seen U.S. Oil production continue to be below where it was at pre-pandemic levels. But look, over the history, we have 150 years of oil history to look at. And whenever high prices come along, eventually the producers come out of the woodwork. Just the climate discussion is probably going to mean it takes a little bit longer before that happens.
Yeah, I got to tell you, I was filling up my truck yesterday, and $150 didn't do it, didn't get me completely full. I can see that Americans are concerned about that. What do you think about consumer behavior here in light of the horrible numbers we got out of UMich last week?
That is coming out of the woodwork, isn't it? I mean, everybody, has those conversations with their friends where they talk about whatever the car they couldn't buy or the Christmas gifts they can't get, or, oh my gosh, how much did it cost for me to fill up my car? And that is gonna weigh on sentiment. And it's not just about employment, because employment numbers are pretty good. If somebody wants a job, they can probably get one. So this is something that probably a lot of Americans haven't felt. If you're under the age of 45, this is kind of a new feeling for you. And yeah, it's gonna have an effect.
Ed, thanks so much for joining us. Ed Clissold there of Ned Davis Research. And I got to say, I've been looking for houses here. And yesterday I was up in Westchester at a place that someone bought in September and is now trying to flip for 20% more. I thought it's never going to go for that. The realtor called us last night and said they got 3 offers today and they want their highest by tomorrow. So
okay, and we shouldn't worry about the U.S. housing market then. Well,
it's unbelievable.
Maybe. I'm still, to Ed's point, I'm still trying to find available a Christmas gift, a holiday gift that I promised to somebody for last holiday. Maybe
PS5.
I need to shop better.
Or Xbox.
I'm not doing very well, am I? Coming up on this program, is Ether's record run set for a pause? More on crypto next. This is Bloomberg. This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, former Richmond Fed President Jeffrey Lacqua. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards and Tom McKenzie in London. Let's get to crypto right now. Technical indicators suggest the rally in Ether, the second biggest cryptocurrency is due a breather after a record-breaking run that topped Bitcoin, really blowing away what Bitcoin has done, at least year to date. Joanna Ossinger, Bloomberg News editor for Asia Crypto Coverage, joins us now from Singapore. And Joanna, we actually heard Ken Griffin last week say, and he's a crypto bear, that he thinks Ether is going to replace Bitcoin. Does it seem like it's run too far, too fast, though?
It has had some pretty impressive momentum, and some indicators do say it's due for a pause. My colleague Akshay Chinchalkar did the numbers on this, and if you look at the last run higher, it's about matched that in this run. And so he's saying it could be due for a pause here. But we're still above the 50-day moving average, even the 20-day moving average. I mean, it's been fairly relentless in moving higher, and it's down just a little bit off the record. It's about 47.33 right now.
And Joanna, for some people in some geographies and some asset classes, technicals are everything, and they guide thought on all kinds of asset classes. For cryptos, even more so, perhaps. So, I mean, how much of the crypto world relies on looking at these technical signals?
Yeah, good question, Anna. So it's a fair amount. I mean, there are a lot of people who just think it's going to go higher, right? They got into it, and over the past, 5-10 years, they have somewhat been proven right by that, of course, with a lot of volatility. So you can't just assume it's going to go up and stay up. There are, 80-90% drops as well. But the technicals do offer some sort of metric, because it's often hard to say what the fundamentals are of a cryptocurrency other than that people might want to get into the network and this sort of thing.
Yeah, so that's the technicals. What do we know about the holders of Ether? There's been a bit of research into the holders of Bitcoin suggesting that maybe 1% to 2% of holders have 99% of Bitcoin, so you have this whale effect. Are there similar dynamics at play for Ether, or is it different?
Somewhat. I mean, with most of the top cryptocurrencies, you will have some amount of concentration in it. And of course, Ether is so fundamentally different because Bitcoin is proposed as a store of value, really, just in terms of holding it and possibly as a payment network at some point. Ether is really more the value of the Ethereum network, and a lot of applications are built on it. So it's more of kind of an app store type thing. So they are very different in a lot of ways. And people knew what Bitcoin was before. This year, people have really started to figure out what Ether is.
Joanna, thank you very much. Bloomberg's Joanna Ossinger with the latest on the world of crypto. Coming up on this program next, coming up this week, in fact, the 4th annual Bloomberg New Economy Forum kicks off in Singapore. We'll be speaking with world leaders across a range of subjects, including finance, trade, climate, cities and health. It all starts Wednesday on Bloomberg TV at Live Go on your terminal. That is also available. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Tom McKenzie with Anna Edwards here in London and Matt Miller in New York. Airbus has booked a mega order worth more than $30 billion for 255 narrow-body A321 jets. At the Dubai Air Show, the deal will be shared with various carriers, including Wizz Air and Frontier Holdings. The CEO of Airbus spoke from Dubai with Bloomberg's Guy Johnson.
This is confirming that airlines start to look at the horizon, and we see the traffic rates going up. It's still a COVID-19 situation. We are not back to where we were in 2019, but I think we start to see the light at the end of the tunnel.
We've just seen the reopening of the North Atlantic. Are we going to see, Guillaume, the transition from this being a narrow-body recovery, which speaks to the order we've just been talking about, the Wizz order, to a wide-body recovery? When do we start to see big numbers for the bigger planes?
That's a very important question, and thank you for asking. We see the recovery as well on wide bodies and very long-distance flights, international flights, but not to the same extent. We continue to believe it will take more time to have the long-haul flights back to what it was in 2019. So we see the full recovery between 23 to 25, and it's going to be earlier for single-aisle business than for wide-body business. When exactly, we don't know. We think Asia will probably also take more time to fully reopen, so there's still a lot of work to be done.
Guillaume, let's talk a little bit about the freighter market. The freighter market has kept many airlines going during this crisis. I was talking to Shai Weiss about this other day from Virgin Atlantic. He certainly sees a big story going forward for freight. You do clearly as well. You've got the new 350F, the freighter. When are we going to start seeing big orders for that? Are we going to see a big order for that at the show? What are we thinking about the structural change in the market as a result of what freight is doing right now?
The freighter is a segment of commercial aviation that is not very big in terms of number of planes, but has played a huge role, has been a very big help in the pandemic for many operators. And we see a shift in the way goods are transported around the world. There's a lot of value that is carried by air, not necessarily the heavy goods, but the ones that have a high value and don't like to stay in inventories or being carried around the world. And we believe the cargo market will continue to expand. But there's also a structural change just ahead of us. There's a lot of old planes that need to be retired. Operators want to replace them by more fuel efficient and carbon neutral planes. And we see also the ICAO has put in place a regulation that will make those older planes not being able to be delivered 2028 onwards. So that's the moment where we come with the A350 freighter. That's a great platform for a cargo plane. It's going to enter into service in 25, and we'll see orders coming soon. At the show, after the show, we'll see. But obviously, we are in discussions for orders on that plane.
The CEO of Airbus there, speaking with Guy Johnson from the Dubai Air Show, talking about the fact that he thinks it's going to take a little bit longer for Asia to reopen. Along those lines, we just got some heads out of Singapore right now that country, that city-state is going to open vaccinated travel lanes with India and Indonesia, which is really a key hub. Obviously, Singapore, huge hub for Asian travel. So that is good news for the industry. Tom Keene joins us, co-anchor of Bloomberg Surveillance, to preview what's ahead on his program. Tom, I just note that, even if it looks like things are opening up in some places, like Singapore now saying they'll open a travel lane with India, you've got record COVID cases in Germany. Austria locking down again for the unvaccinated. Another wave is coming on.
You really wonder where we're going to be in 30 days. I did notice, and of course, Matt, this is centered around Bloomberg's commitment to Davos and the World Economic Forum. You really wonder, are we going? That's in Switzerland and Austria and parts of Germany. I really noted that, Matt. I know you're way more up to speed than I am on that. You wonder what they'll do in Turkey. And today, with lira solidly based at 10 lira to the dollar, a long-term look, Matt, at a fractured country. A depreciation, a devaluation folds right into GDP. This goes back to JFK and the 1960 Turkish coup with the assassination of Menderes, the prime minister at the time, and the great Turkish expansion when the West learned how fragile Turkey was. And then the green arrow is the Erdogan boom of 2002, which was a moonshot. And they've just rolled over as signaled by that depreciation in the lira, and they are way behind.
Right, and interesting you bring this chart to our attention today, Tom, on a day where we're seeing Turkish banks actually having their best day in some 6 years. The Spanish bank BBVA giving a vote of confidence to the Turkish banking sector by buying out part of a business it doesn't already own. This is a sector that, just like the rest of the investment case around Turkey, has been weighed down to some extent by real macro challenges. But BBVA seeing a way through that, it seems. Well,
BBVA, and folks, for the American audience waking up, this may be inside baseball, but the fact is the Turkish economy is extraordinary. It's Matt, it's the best road trip food I've ever had. ever. It's like, think of Istanbul as like California on steroids in terms of fresh food, and BBVA wants to be part of that. And they can be part of that if they can come out, if they can extract themselves from the tailspin they're in.
Yeah, the dining by the Bosphorus, Tom Keane.
Doner
absolutely,
kebab.
co-anchor of Bloomberg Surveillance. Thank you very much indeed. That show coming up next. Now look at what else we are watching. I'm focused very much on this Xi Jinping, President Biden summit. It's happening later today. Look, we don't expect there are going to be major achievables that come out of this, but the political dynamics between and behind both of those presidents is interesting, of course, when you take into account the poll ratings that are plummeted for Biden and then that strength of support for Xi Jinping that he got at the plenum as he looks to secure a third presidential term. How that plays into the conversations between the two presidents.
Yeah, we'll be watching that very closely to see if anything comes out of this. You never know, right? Because it didn't look good for COP26 at the end of last week, and then they get a breakthrough agreement over the weekend. Tom has me thinking about flying into Istanbul for a doner kebab. They do them so much better there than they do in Berlin. But I'm not sure if they're going to want to let me in out of Germany now that the COVID infection rate has climbed to the highest it's been throughout the entire pandemic in Germany. We're talking about more than 300 infections, new infections every day per 100,000. I'm keeping my eye on that as I prepare to fly back home. Fortunately, I still have a couple weeks before I get back to Germany, but I'm a little bit concerned now. Maybe my wife will let me just stay through Christmas.
Well, I hope you get your travel plans sorted. Here in the UK, Matt, we're focused on the politics. There were two polls out over the weekend that put the leading Conservative Party actually behind the rival Labour Party. There's been a host of ethics scandals, essentially, plaguing the leadership of Boris Johnson. There is no election coming soon, though, not before 2024, unless it is called early. So more medium-term or more short-term, if you're focused on UK assets, you might want to watch the Bank of England's Bailey, Governor Bailey. He's testifying in front of Parliament today at a parliamentary committee. That comes, of course, before the December rate hike decision, which will be watched really closely by everybody in markets. More Bloomberg Surveillance is coming up straight ahead. We'll hear from former New York Fed President Bill Dudley and former Richmond Fed President Jeffrey Lacqua. Lots to say about inflation, no doubt. This is Bloomberg.